In this video, we're going to be talking about the descending wedge chart pattern. Stay tuned. Hey traders, a very warm welcome to you. I hope you are well and trading is going great for you. Anyway, this video we're going to talk about the descending wedge chart pattern. What is it all about? How it's formed, the characteristics of it, and most importantly, how we can trade it to make some money in our trades, or we can add it to existing strategies, gives us more high probability of making a profitable trade. All right, look at the characteristics of it. Let's talk about it. So first of all, you can use this on pretty much any time frame. Now, I know you could possibly use it on a 1 to 5 if you're day trading. I would suggest it's better suited for the swing traders. So hourly, 4 hourly, daily, that kind of stuff. This makes more sense on that longer time frame because it has time to play out a little bit more. It has time to get rid of some of the noise. It can be quite noisy and quite difficult to spot. So I think if you're trading this on a 1 minute, unless you're putting it as part of a multi-stage strategy and then you saw this, I would probably recommend doing this on a higher time frame. But that being said, there's no right or one way to trade, guys. Let's just get on with it. Okay, so the characteristics of a descending wedge are this. We have a bearish kind of price pattern, although this is bearish in itself, although the pattern itself, the textbooks consider this as bullish. And let me talk about that, and we'll touch on that in a second, guys, but let's just put that down for now. But let's look at the characteristics again. So the characteristics are we have lower highs, we have lower lows, but the lower lows are, or the trend line on the lows is not as steep as the trend line on the highs. What I mean, so in other words, if we put an angle here, this angle here is going to be way more than this angle here. So that's going to be bigger than this angle. So there's more kind of, in other words, the buyers are stepping up sooner than you would expect them to do. Because if this is a symmetrical channel, then the lows are going to be down here somewhere, all right? You get the idea. They're going to be kind of here, and we're going to have this symmetry to it. And you would expect that buyers are going to wait until a lower point to step in, or sellers are still going to be as aggressive. So the theory behind this is the supply-demand is shifting, but it's shifting sooner, and momentum may well be running out for the bears. That's the theory behind it. Momentum is running out. Maybe buyers are a little bit more aggressive on this. Maybe buyers are the ones that are going to come out on top. So the theory is we've got a bullish chart pattern. Now, as with other chart patterns, you've got to make your own decisions on this. I always like to look at stuff and look at supply demand shift and how it shifts. And it makes a lot of sense. It makes a lot of sense that this is bullish because the momentum's running out for the bears. But for me, I don't know if that's enough. Is that enough to say momentum's running out for the bears? Could we just then sit in a chop? Who knows? I think you've got to put it in perspective, which is why I like to put these chart patterns and then kind of see where they are in the bigger picture. So if we had this chart pattern and we were, let's say we'd done this, excuse the kind of bit of a mess, but we'd done this and we were in a downtrend and we had this and we're coming back up and the textbook's saying, okay, we're going to break out here, you need to buy that breakout there. I would be pretty cautious of that because I respect in the overall trend. I respect that, okay, the trend does change at some point, but I'd be concerned that perhaps this hasn't finished doing what it needs to do yet. Price generally doesn't do V-shape, doesn't do one direction generally. I would be concerned it has to do a bit more work to the downside first. So whilst I would respect this pattern, I would probably want to see, maybe a retest or something, maybe a retest of this high, or maybe a retest of this channel point, this wedge point, or something after the break to let me know that, hey, it's okay to go long here. Or if it sort of blasts off into the stratosphere, let me clean this up a little bit so we know where we are. If it blasted off into the stratosphere, maybe I'd buy a pullback after the wedge. So I'd use the wedge as kind of a filter and say, okay, we had the downtrend for kind of a year or whatever. We've now had a couple of weeks or months of this wedge pattern. Are we change direction? Yes, we've pushed up, we broke through the high, we've pulled back. I might have a little go on that. That would be a bit more interesting. However, let me rub that off now, or rub half of it off anyway, so we can see a bit clearer. So, however, if we had price doing this, guys, right, and we've had a year uptrend, and then we get this wedge pattern. We've got to be careful we're not confusing this with a flag. We'll talk about flags another video, but this is probably a little bit broader. The flag is a little bit tighter. This is kind of more of a wedge. You know, it's a wider pattern. It's a wider pattern. The flags and pennants are much tighter. This is a wider pattern, giving a lot of price excursion. I'm a bit more interested in going long on this. This looks kind of better to me because as we push through this high point, I would consider that perhaps the overall trend was just pausing a bit for a resumption of the trend. So I'd be more inclined to kind of go long on that. And maybe I'd be adding on my pullback. Or, you know, if it faked out to the downside first and then went up, I might be a bit more aggressive and buy it a little bit earlier, but I can quantify my risk on the trade. Because that's all I'm about. I want to make as much money as possible for as little risk as possible. And if I could find a way of expressing the trade with a sensible stop, then I'm going to go in a bit more aggressive on that trade. So that's the descending wedge, guys. Generally a bullish pattern, but you know, my take on it depends on where you see it and where you see it in terms of price point and what's happened before, as to whether you just go straight in and not worry about it, whether you maybe want to see a little bit of price action, a little extra confirmation first before you take the trade. Anyway, guys, hope you enjoyed the video. Give it a thumbs up if you did. Don't forget to subscribe for more videos from myself and other traders on this channel. And as always, take care, good trading, and I'll see you soon. Bye-bye.